Good evening everyone. My name is Ram Dhamija. Welcome to my channel. Today is 25th of September, a Thursday, and the markets have been very volatile today. In fact, more than volatile, the markets have been very weak today, and Nifty actually cracked below 25,000, and it was consolidating within a range of 25,300 to 25,000, but today it decisively broke that 25,000 mark, and it ended at about 25,900. Today was also Sensex expiry, but that's not very significant. And the pressure was there. There was a lot of pressure on the IT sector. TCS tanked big time today, and along with the weightage of the IT sector, it was a big drag on the markets, and the markets actually fell down. There is a lot of things which are worrying the markets, and especially since the day that H1B news has come out, we really haven't been able to fathom the full extent of that. And initially it looked like it's not a very big thing, but the way IT companies are reacting, it might have some secondary and tertiary repercussions. And one bad news after the other that has been coming out of US has been a big worry on the markets. So I will take you through the entire action, how the day has been panned out, and what is in store for future. So let's begin today's video with the Nifty chart. So if you see, this is the Nifty chart for today, and it was just one way down move after open. So we opened at about 25,150. We tried to make some sort of a we opened at 25,000, not 25,100, 25,050, and from there we tried to make some sort of a up move at about 25,080, and from there it was just a giveaway. So the initial first half an hour or 15-20 minutes was when we tried to make that up move, but once we failed to cross 25,100, then it was a clear down move, and especially after 145 it was just a waterfall. So till 145 we were trying to protect the 25,000 level, but then after that the markets just gave away, and we finally closed at about 25,900. Now let us look at the implication on the daily chart. So this is the daily chart, and you can see over here that this was a crucial level, 25,100. We have broken that. Now comes the next crucial level at 25,800 that I have been talking about, and then eventually 24,300. So these are the two levels now we have to watch out for. I was not really expecting that we are going to break 25,000. It was not looking, but then this news flow, the unpredictable news flow that has been coming, and you can see after that what has happened. So we are just getting one red candle after the other. So when these kind of news flow are not factored into the markets, when any new stimulus comes in, which market is not prepared for, then it has its own repercussions. Like the IT sector has fallen almost 7-8% since that news has come out, and of course that is going to have a bearing on the markets. So markets, though in my opinion, are still not very weak, because this up move that we started from 24,400 till 25,400, that's a 1,000-point up move. We have probably retraced some of it back, but not all of it. So till the time we are able to protect this 24,400 odd levels, which are still about 3% odd away, I don't think we are weak by any stretch of imagination. We might consolidate in this range that I had talked to you about, because we had made this 1,000-point up move very quickly, and then we might again start to have a shot at all-time highs. Whenever the markets are consolidating, these kind of up and down moves will happen during the course of the day. If you look at the sectors today, these are the list of the sectors. So IT was the biggest loser at 1.27%, followed by autos at minus 0.92%. Pharma was down. Again, pharma and IT are two export driven sectors, and they are primarily US, I would say, and that is where we are seeing a lot of weakness come in. If you look at infrastructure, that was also down. Energy was down. Small cap was down minus 0.6%. Nifty 50 was down minus 0.6%. The only thing that was holding up today was metals. And again, within that, today precious metals were doing very well. But this is the Nifty metal stock index. So that was doing well. So metals, hard assets are doing much better in this uncertain environment. Now let us look at the open interest. Now if you look at the open interest, there were about 6.4 crore calls added, which is a very bearish sign, and the calls have been added at 25,000, 25,050, 25,100. So the bears are very confident of defending 25,000 as we speak right now. So 1.2 crore calls have been added there, and then they are pressing their shorts at 950 and also at 900. They are trying their luck. And if you look at the total open interest for Nifty, it is at 0.58. Oh, that's very bearish. 0.58 is hugely bearish. So this is a 10 crore gap that is opened up, and we are sitting on Thursday only. This is not good news. This is really not good news. But we'll have to see whether this gap gets closer as the days go ahead, or this gap widens, because 10 crore gap is significant. See, this kind of put call ratio can also be 0.6, but if there are, let's say, 10 crore calls and 6 crore puts, then also it will be 0.6. But the difference between the call and the put will be only 4 crores, but over here 10 crore difference is there between call and put. So that's significant in my opinion. We'll see what the implications are. Let us see if this closer strikes are still okay. So the difference is not much between the first 10 closer strike. So over here I would say it is comforting, but that basically means a lot of OTM calls have been written you can see even 26,000 calls have been written. So people are trying to eat away as much premium as they can. Or it could also I think that's what it is happening, because they are writing calls which are far out of the money, which is just basically eating premium. Because if you look at the first 10 strikes, the difference is not that much. It is only 2.5 crore calls difference, where PCR is also more balanced. So it's okay. It's not as bad, but yeah, 0.58 is something to be wary of. This is the India VIX chart today that we saw. So it spiked at about 10.9, which is closer to 11. So VIX is rising slowly. Today also it was up. So that's also an indication that the markets are slightly weak and there's volatility coming in. Now this was the culprit for today at minus 1.27% Nifty IT. And you look at Nifty IT index, what are the constituents and how they have done. Just one sec, I will bring that out. It was basically TCS which led the fall today, and followed by Infosys and the others. While this is loading, I think I will come back to this one and showcase to you how the stocks perform. But if you look at the chart today, it is not something which has been good today. And as I said, that it is weighing on the entire market. The IT sector is completely weighing on the entire market today, as we speak. Let us look at the international cues, how international cues are stacked up. And so US 30 years and 10 years have gone down. They are in that range. There's nothing significant to see over there. Nasdaq, everything is down basically today. You look at Nasdaq, you look at S&P, everything is down. And even Brent oil is down. USD INR surprise is down, or you can say it's flat, which is good. Even gold was down yesterday, as you can see, 37.87. So it came down from 38.12. Though it is slowly rising up for today, but it was down yesterday. But silver, look at silver. Silver has crossed $45 to an ounce. Silver all-time high is 50. It is which was made in 2011. It looks like it's going to crack that any time now. So silver is not stopping. Silver is at 45. I'll show you the silver chart as well. So if you look at this is the silver 45.27, it's up 2.45%. So silver is just not stopping. There's just no stopping silver. Every day it goes up. The rally has been tremendous since it broke the range at about 30. It was consolidating at 30 and then it broke. So this was one tweet that caught my attention today. This was by Nitin Kamath of Zerodha. He says there hasn't been any consultation with any of the brokers. To the best of my knowledge, SEBI always consults the industry participants. So this was in reaction to a news which was floated yesterday on some portals that SEBI, starts a consultation process for removal of weekly options. Now this has been going on for a very long time. It's not good, because these are all unverified reports that come in and they cause a lot of panic in the market. So this needs to stop, and they come from very big channels and so on, which is not good. So this was a clarification that came out from Nitin, and I think there's some clarification that has come out officially also, that there is no such move that is there. So this causes a lot of disturbance in the market, and there are a lot of participants whose earning is dependent on weekly expiry. So any news flow that comes in, unsettles a lot of people, and most of the traders actually depend on the weekly expiries for their survival. So if such news come out, then it's not good for anyone. So I think it should be best where we actually look at official sources only, and then only believe in such news flows. So that the update for today. Some of the key highlights, takeaways from today would be IT under pressure. That is causing a problem. A lot of IT stocks like TCS, etc. And in fact, all the Tata Group stocks have been under pressure this year. I was just reading some report somewhere where most of the Tata stocks like Tata Tech and TCS, Trent, and so on, all have been under pressure, severe pressure. So these are cycles because these stocks were performing very well a couple of years back. No individual recommendation or any comment on any particular group, but it's just an observation that some of and that's the highest quality that you can find. But that the group stocks have been under pressure, and TCS was under pressure. But I think that news is more related to the H1B thing that has happened. So IT sector underperformance is the key one. Our markets breaking 25,000 is a key one. Open interest slightly negative is a key one. At a whole, it is hugely negative, but the closer strikes slightly negative. So that is a key thing to watch out for, and see, if the closer strikes also, if the gap increases, then it will be a big pressure on the markets. Otherwise, I would still say that we still have to wait and for confirmation. This might be just the regular correction that we are seeing. 25,000 breaking psychologically is a blow, but it's okay. In the larger scheme of things, it's fine. It'll all settle down. It's not too much something to worry about. And of course, silver breaking out. That's a big one for today. So these are the things that I wanted to share with you. And I hope you liked the video. If you did, please do like, subscribe to my channel. And I shall see you soon with another update. Till then, take care. Bye-bye.